Good morning, traders. Welcome to Thursday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump in, make sure we always want to double check what's going on for today as far as the news goes, and we don't want to be surprised by any news announcements. So looking at everything going on today, we've got some small news announcements at 7:30. The Challenger job cuts, not a big deal. The first big news announcements at 8:30. That's the initial jobless claims forecast at 775,000. Medium announcements after that at 9:45 with the market composite PMI and services PMI. And then the next large announcement at 10 o'clock. That's the ISM non-manufacturing PMI forecasted at 56. So we've got some news to kind of play around with 8:30 and 10 o'clock, but that's really about it from the news perspective. So now we can jump in. We've got some fun stuff going on, that's for sure. All of the charts are moving pretty well. So let's jump in for today at, let's see, today is 12/3 of 2020. First on the list is going to be the NASDAQ, and one of the most obvious things with the NASDAQ is the falling resistance. If we take the channel, now that we see the channel lows, taking from the bottom and then transposing that level up to the top, and we can see what the market's skipping off of. It's so shallow I can't even draw it with my illustration tool. We've got some resistance, more resistance, resistance, all the way down. So realistically, until this is broken, the buyers are going to have a hard time. There's obviously a brick wall here. And if we look at the larger picture, it does look really, really good for bullish continuation. And this is one of my favorite types of combo setups is when you have a channel that's rising higher. And then within that channel, you get some type of a wedge consolidation that allows the market to kind of ping around inside of here. And it gives it a nice breakout point right there. And that's kind of what we're coming into. We're getting, it's got to go sideways for quite a while still, but we're getting into that area where we're seeing that falling resistance, prepping for a breakout to the upside, going for a continuation in the larger direction of the trend. Now, if the buyers fail, right, if we fail to see the bullish continuation, then realistically, it wouldn't be a surprise at all to see it dip back down a little bit further towards support at around 366.21. That was the same area roughly as it was yesterday. It really flushed through there and then popped back up. But in the end, it did still end up holding. So that zone will be an area of interest, but more likely now on kind of the falling channel support instead. So even if the market does fall lower, this rising channel support, that's kind of all that's left. We've got the pivot, and we've got rising channel support, and then that horizontal support, but it's kind of detached. So down here is kind of gross. That becomes kind of messy. It would actually, not very often is the case, but would be a little bit nicer to see it break out to the upside. Price action might be a bit cleaner, or just get annihilated all the way down to the lows. Then over to the S&P, similar situation, of course, as the NASDAQ. But one thing that stands out fairly obvious here when compared is the S&P seems to be much more top-weighted. It's not as messy looking. We've got some nice support a little bit further down around those 3651s. But if the market wants to fall a little bit lower, look at the next area, right? Major swing high. We've got the bottom of the channel by the time it gets down there, or the bottom of the descending wedge / channel, whatever you want to call it. You've got S3 floating down there. There's a lot of things that are showing some potential bullish interest on a deeper move lower, 3632. That would be the zone of interest for now. We do have a major lower high, so they were unable to break above that top, which really makes it a problem, because if they are able to, as soon as it gets into like the 3690s, it's just going to find more buyers taking profit, resistance, push back down. So buyers, if they're going to try to reload and get this move going back up, it's going to take some deeper prices. It's just a little bit expensive up here unless we can start breaking some of this bearish structure. And over to gold, we've got, what a wonky looking chart this is. We've got the larger bull channel that's working its way higher over the last couple days, and now we've got kind of this sort of inside-ish channel, this gold-orange channel that's sort of hovering by itself. It initially looked like it was a short-term spike in channel, But then it kind of broke and got a little bit wider, and now it's widened out all the way out to here. So now it's becoming a relatively large channel, but it's working its way up towards the top of the larger channel. Now, the one big difference here compared to some of the others, when you've got a bullish structure and a bearish pattern creating a breakout point, that's a nice launching pad. This is a bullish channel with a bullish pattern, right? That makes it very difficult. That requires a lot of consistent strength to maintain prices up this far. So if the buyers are going to keep this going, they're really going to have to step up to the plate. We've got big resistance hovering above at the 1847.8s, but if the market's able to break away, then we might see them rush up towards the channel highs at 1860s, 65s. If we do get a pullback like some of the other markets, if we get that quick little flush down, big support at 1812, that's also the S2 previous structure, everything stacked up in the same spot. Between there, you've got a little bit at 1795 with that previous swing high, but again, it's kind of naked. It's just sort of hanging out there. Better support would be a bit further down at 77.4. Over to crude oil, and we've got this bear channel, which is tried to get a breakout above the top. Relatively unsuccessful so far now. We had that initial bounce up, really huge drive, and don't get me wrong, the buyers might still try to take this up, but seeing this giant leg to the upside not hold a shallow pullback and pull way down here, that's going to shake the buyer's confidence a little bit, and it did. We've got a higher low, higher high, lower low, right? We're seeing a little bit of choppiness around here. Buyers know they don't want to buy up here because that's the channel. It failed holding the channel before. Why buy it this time? It makes much more sense to buy cheap, and that area is going to be around 44.40 initially at the previous structural zone of interest, but with that kind of overshot on the highs, a lot of times the market likes to overcorrect down that much as well, and that gives us a big zone of support around S2 channel lows 43.52, or even if it really slides 42.64, but those are kind of the major zones of interest right now going into crude oil. Where we are now, we're just stuck at the top of a channel that failed its breakout, and now it's holding all of the inside resistances. It's just not a good sign for buyers at all. If anything, buyers are trying to buy cheap. Nobody's really wanting to buy up at the top. And then over on the euro with its rocket ship continuation to the upside, well, actually, we had a little bit of a pullback here, a fairly decent pullback, several consistent bear bars to the downside earlier, around 4:45 this morning or so, and now it's starting to kind of rebound back up. Realistically, this rising wedge, it's increasing, right? It's an increasing pattern. That means the higher it gets, the further up it goes, the more and more money it's going to take to sustain this movement. It's difficult, right? It's hard to move bullish moves up, break out higher, keep going up. It takes a lot. So knowing that we're really kind of grinding higher, we've put in a big chunk of resistance up here with a beautiful rejection. It wouldn't be a surprise at all to see sellers defending that original entry point, right? That nice little inside bear bar, especially given the response. So even though we are coming back up, and it's likely that the bulls do end up taking this further, don't be surprised to see sellers try to press back a little bit from this point. Now, if we can get a pullback and a secondary bounce, then it's still looking good to the upside. The bulls are really gunning for that 1.21450 or so, this kind of big red zone up here. If the market does want to pull back, we do have pivot point support at 1.20945, and if it wants to dip a little bit further, we've got some pretty good structural support around that 1.20612, and then of course if it goes lower, 1.2. It's kind of hard to miss that one. So the euro in a very interesting area, pretty lofty up here, could really use a pullback for buyers to jump in with some meat. And finally, over to Bitcoin, really messy looking chart here. We had that big flush a couple days ago, and buyers picked it up very aggressively. Yesterday, it was just kind of a continuation and slightly sideways, but for the most part, still angled to the upside. So it appears as though buyers are trying to get something going. Now, what we're coming into today is a bit of a wedge breakout from yesterday, but this wedge is really high up. You remember some of the other ones, we would see the wedge come in at the bottom of the channel, right? Those are my favorite. This one's just kind of hanging out in the middle of nowhere. So, yeah, sure, it is a wedge breakout. It's a breakout pullback. It looks good, but we're in the middle of nowhere. It just doesn't make any sense here. So realistically, the buyers are still probably gunning for a larger objective, and that is fairly obvious at the top of the channel. Also R2, and also all of those major swings back up to the 19,800s, 900s. Now, we've got a lot of shorts that are probably stuck down here, and none of them have really been given a chance to get out of break even all the way back down. Break even, if they're selling here, sell more here, then sure, their break evens were in the middle, and they were able to exit. But aside from that, the sellers are still stuck. And as long as this keeps going to the upside, that's when we can start squeezing them out and continue the rally to the upside and kind of get that break above 20,000 with some conviction this time around. So that's kind of what I'm looking at on Bitcoin. We're just in the middle of nowhere. We need a bit more of a pullback or a bit more continuation to the upside, or something that is just a little bit not right here in the middle. All right, well, that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let those winners run. I hope you have a fantastic trading day today, and we will see you all tomorrow. Thanks.